There's been a sparkling rally, a blitzing rally, if you will, when it comes to all of your metals. First things first, let's get you a chart check going as far as silver and gold are concerned. Because when you take a look at the move for the last 7 days, you have a 1.6% uptick coming in for silver prices as well. For gold prices, that is. And when you take a look at silver, 4.9% is the kind of uptick that you've seen coming in for silver as well. On a 6-month basis, in fact, you've seen silver prices outpacing gold, 25.9% uptick coming in for silver versus gold's 23.4%. As you can see on your screens as well, 43.9% thereabout is the gain for a year-to-date basis for bullion, and on that also contrasts with 38.5% for gold as well. So let's also take a look at the levels today. In fact, you do have gold scaling that fresh record high earlier today, and other than that, silver steady below that 14-year high as well. So those are the levels that you're seeing coming in for the precious metal. Quickly, let's also take a look at some of the gold-silver ratio dynamics as well that we're seeing, because that is where you're seeing quite the interesting move come in. Currently, it is at 87, the ratio that I'm talking about, which is just how much of 1 ounce of gold can be used to buy how many ounces of silver. So 87 is the number that you're looking at here. Historical average is about 50 to 60. So that's something that you're looking at. Quickly, key tailwinds as far as both metals are concerned. Central banks, of course, ramping up buying. That's one that makes it to this list. And other than that, why we're talking about it right now and this week is because you do have hopes of Federal Reserve rate cuts bolstering bullion as well. And in fact, talking about it, let's also get you an expert opinion. We do have Naveen Mathur, who's the Director of Commodities and Currencies at Anand Rathi Shares and Stockbrokers, joining us on the show. Mr. Mathur, thank you so much for taking time out, and a very good afternoon to you.
Thank you very much, Riyansi. Good afternoon to you and all the viewers too.
Well, absolutely. You know, this is the perfect day to be speaking to you because gold has managed to eke out another record high. It seems to be a story of weeks and months at this point in time. What do you make of the tailwinds?
I think you have picked up the right choice today. It means not today means I would say it's been happening. The gold is touching all-time highs, and even the silver, for that matter, in India, particularly in rupee terms, touching all-time highs quite often. For gold, we are currently at around $3,680 an ounce, and for silver, we are trading at around $4,268. Particularly, all the reasons which you, Shransi, which you have shared with the viewers just now, holds true for both bullion metals, which are gold and silver. I would say silver is predominantly on the higher upside because of the kind of uncertainties on the tariff. I would say stabilizing to a large extent, but still the question with respect to the economic downturn, the global economy remains firm. So both the assets, particularly gold, is a risk-averse asset class and performs pretty well. As you have seen, 38 to 40% kind of returns year to date, and the last year too were steady returns too in the range of around 30% or so. So I would say that the safe haven demand, the central banks buying gold to diversify their reserves, and at the same time, the mutual funds, the ETFs across the globe, looking forward to do business and I would say get onto the rally for gold and silver are some of the major factors which are taking the gold-silver prices to the new highs. At the same time, the dollar is also under pressure. The Federal Reserve seems to be cutting the interest rate 3 times this year. And that particular dovish stance of the monetary policy also is playing to an extent the positive, I would say, positive note, particularly to the gold. As far as the industrial demand is concerned, that's been pretty much muted across, except for China.
Well, absolutely. Mr. Mathur, I quickly had a follow-up when it comes to this, right? Since you've mentioned the dollar impact, I was wondering what you make of the de-dollarization trend going forward, if that is something that you're penciling, seeing a continuation of then.
Now, I think the way the Federal Reserve is being pushed by the U.S. administration, we have seen one of the efforts to oust one of the Federal Reserve governors last week, the governor, Lisa Cook. So not many things are happening on that account, Shreyansi. And I think the global factors, the geopolitical factors also are important to be looked into. The kind of I would say the SCO summit, particularly the coming Quad summit, would be critical. So I think the geopolitics plus the Federal Reserve issues with the administration are playing a crucial role in terms of the validity of dollar. But then, having said that, I think it's not an easy thing to look out for some other currency than the dollar as a reserve currency for the global economics. So that's hard to say that the dollar would be replaced by any currency soon. But with the tariff wars, the kind of alignments, or I should say, the realignments we are seeing within the developed and the developing countries can definitely look for we can look for an alternative in due course of time, maybe years, but not as of now. On silver, Shreyansi, particularly the deficit, the industrial demand being muted, but the deficit of the silver for the last couple of years, again, is playing a critical role. We are seeing the solar panel, the EV demand in China, which is strengthening up. The China photovoltaic industry index jumped to the highest level since October 24 last week. So, which is indicating...
Well, absolutely, Mr. Mathur, and before we get cracking on the tailwinds as far as silver is concerned, and there's a bunch of those, right? Sister metal, of course, for the 4 billion, but first things first, one doubt that I had about gold and silver and what you make of it, I'm currently curious when it comes to the gold-silver ratio. We've seen very interesting trends also emerge here, right? Because back in April, you had that ratio of about 107 thereabout. The historical average is somewhere around 50 to 60. Right now, you're looking at 87, which is quite interesting. In terms of the gold-silver ratio, what does that really indicate to you right now?
I think the historical average of 50 and 60, Shreyansi, would not hold good in the current scenario. That means all said and done, we would be holding back to around 75, 80, 87 levels, which we are currently. Because of where we stand today in terms of the economics and in terms of the political scenario. So overall, the geopolitics plus the economics would play a very, very critical role, and therefore, the prices of gold and silver kind of in tandem being a safe haven. At the same time, the industrial demand for silver would continue to grow and would take the prices maybe to the new highs further. So I think the 87 ratio definitely high from the average.
No, well, absolutely. Mr. Mathur, one quick doubt that I had when it comes to the prices, right? I would let you conclude, but also one thing I wanted to understand is what are the levels that you're looking at? Because some of the brokerages are coming out with quite the bullish notes. They're looking at $5,000 when it comes to spot gold, and even for silver, I've been hearing that there's a murmur about 45. There is a conversation around those levels as well. So those are some very bullish levels that you're looking at. I'm wondering where you stand with your forecast when it comes to your year-end target.
3,700 is where we are for gold. I think around 4,000 looks like to be. I think 3,900 to 4,000 would be something which I would look forward to. Status quo as what we stand in the situation where we are. And for silver, we are at around 42, 43. The high is April 2011, which was around $49.56. I think if the situation continues to be same, we would be at around $45 or so by the year end. But having said that, it might be that the profit booking might come in and you see a downside on both gold and silver because of the spikes we have seen in the last 1 year post-September. So I would say that there may be a possibility of the profit booking. A sharp downturn may also happen.
Right.
But overall, the geopolitics and the economics together combined still says the positive buys for both the metals, gold
Well,
and silver.
absolutely.